Property Finance Uncut, the must-listen podcast for anyone with a mortgage. Find out the truth about what Australia's lenders are up to and how to make sure you're in the best possible position when it comes to your property finance.
And being the best position you can be at any point in time is the secret of property investment. Phil Tarrant, host of the Smart Property Investors Show. But we're here today. It's Tuesday. Reserve Bank of Australia has met. This is Property Finance Uncut. I've got Paul Glossop, CEO of Finni Mortgages, finni.com.au, here to talk about finance. What's going on, Paul?
It's the exciting time. It's the exciting time of the cycle, mate. I think we've been a bit doom and gloom for the last 12, 14, 15 months.
So you have been. I've never.
But I've been the opposite. You always playing the Grinch, the Christmas
walking around,
Grinch.
Your shoulders are slumped. You're scratching your head. You're shuffling your shoes. You don't know what's going on.
Mate, I'm picking up change on the corners, trying to figure it all out.
Trying to scratch together a few bucks. So interest rates, what's happening, Paul? Tell me what's going on.
But I think, look, we've sort of talked about it for the last few months, and we were waiting. There was some data that was coming. Some of it was supporting a pause. Some of it was supporting maybe another rate rise. And then some of that futures data was sort of starting to show that, say, hey, the economy was definitely slowing. But I think the fact that the RBA have paused rates again today, and I think where the commentary now sits is that we're kind of here. This 4.1% official cash rate is probably going to be the high watermark. And I think from here onwards, the exciting part is that we're going to have our new RBA governor enter into her role very shortly, and they're meeting a lot less. And I think we're probably going to see the next move will be down, and it will likely be within a 6 to 12 month period from what we can see.
So you've used the word probably and likely. And six. Give me something to say. Is this it? Are we at the top?
I'm also running. I'm also running for local government, mate.
Mate, you're there at the local town hall saying we might be able to get those potholes fixed.
Maybe
it's probable that there is some chances that we can actually improve those roads.
I think the facts are there, though, mate. I mean, you and I look at this stuff far too often, and we probably like to think about other things in life. But yeah, it is our chosen vocations, and this is where we are. And I think the reality is that we've seen this before, and we'll see it again. But we're starting to see the tea leaves are all pointing towards cheaper money to come. The economy's slowing, and it's slowing pretty quickly. You know, we're pretty much down from what was at about 8.5% at the start of the year. We've seen inflation or CPI data come out for July at about 4.9%, and that was about 0.3% below economists' predictions of 5.2%. If we want to get into the nitty gritty, long story short, the economy is
annualized inflation as well, right? That's
annualized inflation,
you know, right now that's over 12
months.
Correct,
exactly, mate. So essentially, we've seen it halve. Annualized inflation's halved in less than a year, and it's dropping. It's dropping the best part of 0.5% month on month for the last few months. So, you know, are we going to be in this 2 to 3% target band by the end of the year? It kind of looks probable at this stage. So if it keeps decreasing, you know, the reality is they're going to have to figure out how to pump it up again. And, you know, I think there's a few things at play. Asset prices have increased. They've increased close to 5% for this calendar year so far.
You read the paper, it tells you, hasn't it? You're talking about property prices, are you?
Talking about property prices here. So, I mean, we're talking about actual residential property in Australia has increased close to 5%. Essentially up until the month of August 2023. Most assets in most major metropolitan markets are pretty close, in some cases are above what their previous highs were. Markets such as Perth, markets such as Adelaide, they're still hitting their all-time highs right now, and they're growing beyond what their previous highs were. Markets such as Sydney, Brisbane, Melbourne, well, they're back pretty close to where they were around about February, March 2022 now as well. And we've got very little supply coming into the market. We've obviously already talked about a lot about what is happening from a migration, both overseas, interstate, relatively strong jobs market. So we start to do the math. If we see an interest rate cut or 2 or 3 or 4 put into the fold in the next couple of years, it starts to become quite obvious as to what's going to happen to asset prices.
So you're talking about property there, and you know the relationship between property prices and the interest rate environment. But for the here right now, a pause on the official cash rate, so it hasn't gone up. So it means that the banks aren't going to pass that on because there's nothing to pass on, which is a good thing. Banks can operate outside of that. It's a fair bit of oversight on it these days. But what does it mean for mortgages? It means that Okay, well, where you are right now is probably where it's going to stay for some time. Is there going to be another rate rise? I'm not too sure. Potentially, some banks are still pricing in, Paul. But mate, you might work in property and finance. I'm just a journalist, mate. I'm just here to have a yarn about this sort of stuff. So I can say anything. I can say anything, and it doesn't matter. But I do have mortgages, though. I do have mortgages, and I've seen them go up quite a lot over the last over the last sort of 18 months or so, 15 months or so. And if they don't go up any higher, I'm happier. But that doesn't mean that the mortgages I have today are the right mortgages for me today. There's probably still some other options or sharper rates available for me. So just because rates haven't gone up doesn't mean you shouldn't be looking at your mortgages and interrogating whether or not they're the right for you right now, correct?
And this is probably the most exciting thing that any property owner who has a mortgage, be it investor or owner-occupier, should be really starting to think now, is that if we're at this high water mark and interest rates aren't getting any higher, well, the other fact to this matter is that actual prices of property have increased this year in almost all major metropolitan markets. So that means that the valuation on your property is probably higher than what it was this time, or maybe around about December to February, essentially 2022, 2023. So why that's important is that if the next move is going to be down, and you talked about banks moving out of cycle, Phil, we saw some of the big banks come out only in the last couple of weeks to start to talk about cutting their 3, 4, and 5 year fixed rates. And obviously they're doing their factoring in of where money markets are going to be pricing mortgages in that time. But I guess what I'm getting at is that you're actually seeing interest rates cheaper, and they're starting to get cheaper for fixed rates. That typically is going to be a precursor that variable rates will come down sometime in that same time frame. But valuations of property is high. So we've got this excellent time for people to now start considering, if I have equity and I'm thinking about investing in assets or property, residential or commercial, this is probably going to be that excellent time to now say, get those valuations done, get that equity extraction in place, and start thinking about if it's on your radar to buy an investment in the next 6, 12, 18 months. The reality is that all the mechanisms that are sitting out there are probably pointing towards increases in prices. So if you can do it, my advice would be to start considering getting in touch with your broker to getting those ducks in a row. It's not necessarily a refinance discussion anymore. It's an equity extraction and getting pre-approvals in place to start to get ready to go shopping.
So it's interesting how that pivot and that refinance discussion is as relevant today as what it always has been. You got to make sure that the mortgages that you've got are the best performing mortgages for where you are right now. But what you're talking about is an intersection of that with, hey, if you're thinking about buying property, investing in property, you're probably moving into an environment which might be favorable, or you might be able to get a head start on the market or other investors if you play your cards right now. So you speak to your mortgage broker saying, what, I want a pre-approval. How does that work?
Yeah, I think twofold, because, let's say hypothetically you own a home now, whether it's or not property, whether it's your own home or an investment. I think that the conversation would be that if you got in touch with your broker and said, look, I'm thinking about buying shortly, what do I have to do to get in place? So there's probably two things that they're going to want to do. A, they're going to look at your asset value, figure out your equity, your LVR or loan to value ratio. If you're sitting at circa 80% or better, you're probably going to be in the box seat where A, you're going to maybe be able to extract some equity from those existing properties that you own, utilizing that potentially as a deposit for that next purchase. And then secondly, they're going to want to see your serviceability. Now, serviceability is obviously going to be more so not necessarily your equity, but your income versus your expenditure ratio. So if you're in a PAYG, what your salaries are, what your daily, weekly, monthly expenses look like. And then also if you have an investment, what that rent looks like. And that probably that last part, and this is more so maybe some forethought for anyone who owns investments. We've talked about it for the last 12 months, and the upside to interest rates going up and this inflation has been increasing in rents. That's been a really important piece, that if you haven't already done that, that's something to start really thinking about, to doing that and getting onto that as soon as possible. More so because if your rents aren't at market value, and that market value is likely 15 to 20% higher than where it was last year for a lot of people, that assists in that serviceability piece. And a lot of people forget that, yeah, look, I mean, rents go up, that's great. It helps me service my mortgage, but it also is a very important part about when your broker is going to look at your profit and loss. If your income comes up from your rental property, that boosts your serviceability. So get onto that if you haven't already done so.
Okay. How do you get onto it?
Well, pretty simply, I mean, for Finni mortgages, you jump on Finni, finni.com.au. There's a button there to get in touch with our broker immediately, and they will get in touch with you today to go through a very short and succinct checklist to say, here's what we need, and we can assess, do a valuation on your assets pretty much that same day, come back to you with what your serviceability and what your equity position looks like. And then from there, you can start to think, okay, if I've hypothetically got $500,000 to play with, 100 grand in equity, that starts to then shape what you should be looking at from an asset. Next step is to go and secure the correct asset to fit that criteria. But first step, get in touch with your broker. Our brokers are ready at the helm to essentially get moving on that front.
Okay. Paul Glossop, CEO Finni, thanks for your time today, mate. Very informed as usual. And when
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.